The bill is passed.
But we start tonight at 10 going in depth on that House vote on the Trump administration's budget bill, passing overnight by a single vote. 2 Republicans voting against it, 1 Democrat voting present. There were some changes to the proposal to get the support to get it through the House, including the plan to get rid of the federal income tax on tips, which would be a huge move for the service industry. But there are some economists that say it might not help the people you think it's meant to. Iowa's News Now investigative reporter Nick El-Haj is live in studio tonight with a look at what's in that bill and what is not.
Mitch, while the no tax on tips provision is part of President Trump's sweeping tax plan, known as the One Big Beautiful Bill, a few days earlier, the Senate had already passed the same measure as a standalone bill. Now, both versions will have to be reconciled before the president can sign them into law. But already, the proposal is raising questions about fairness and impact.
No tax on tips, while it doesn't have a direct positive impact on the restaurant itself, is something that most restaurateurs are very supportive of.
For millions of workers in restaurants, salons, and delivery services, tips are part of the paycheck. Now, those tips could soon be exempt from federal income tax.
It really is something nice for a segment of our employee population, and those are the folks that have some portion of their compensation based on tip income.
The bill would allow workers to deduct up to $25,000 in reported tips as long as they earn less than $160,000 a year. And cash tips, despite the name, include those left on cards.
Cash tips are actually considered credit card tips as well in this scenario. So it isn't just the cash that's left on the table. What it doesn't include, however, are service fees. And so that will be something that will require quite a bit of employee education. So for example, if you have a large banquet and you do a 20% service charge, that is treated differently.
The IRS already estimates 84% of tip income, roughly $500 million a year, is never reported. And many tipped workers don't make enough to pay income tax in the first place.
So about 37% of tipped workers don't pay taxes already, so they're going to be unaffected by this law. So it's only the better paid tipped workers who are affected, which means that it may not have that much of an impact on the people who might need the money the most.
The Congressional Budget Office estimates the proposal would add $40 billion to the deficit over the next 4 years, a cost economists say is relatively small but still notable.
The tax may raise about $12 billion a year. That would be roughly 1% of the deficit, so it's not a huge impact. And relative to the overall size of the federal budget, it would be a small fraction.
Economists also say the bill creates new winners, but may shift burdens elsewhere.
This increases the tax burden on untipped workers, which would be everybody who's getting a salary, which is about half the workforce, and the 98% of wage workers who don't get tips.
And in Iowa, some lawmakers are pushing a state-level version, one that would also eliminate state income tax on tips and overtime. To be clear, this proposal only targets federal income taxes. Workers and employers would still pay into Social Security and Medicare, and state or local taxes may still apply. The exemption would take effect this year and sunset in 2028 unless Congress extends it. Live in studio, Nick El-Haj, Iowa's News Now.